Hey, it's Clay Trader, and this will be a video chart on ticker symbol XXII. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like few weeks worth of time. It's actually just the past 2 days broken down into 30-minute time slices. I did this analysis yesterday, so that's where these red and green lines are coming from, but certainly want to get a few things updated here. Now that we have more data, there's a couple points here of both buying and where the sellers are, that really become, I think, quite straightforward, especially in regards to where the buyers are hanging out. So yesterday I talked about 89 cents, and that really didn't hold as support. What has been revealed, though, is right down there. So I'm going to now call this level of support at 85 cents. So let's just quickly go through the history of it. You can see yesterday, bears tried to press down, but there were buyers at 85 cents. Again, the bears tried to press down. There were buyers at 85 cents. Fast forward to today. Now the bears tried a couple more times this morning to push down through 85 cents, and hopefully you're kind of seeing a pattern here that once again, buyers showed up at 85 cents. So for whatever reason, I have no idea. There are people out there, and there's enough people that, is stopping the price from going even further, but people think that 85 cents is a good bargain, is a good deal. Now, are they going to continue to feel that way? I have no idea. A chart's not a crystal ball in that sense. All the charts telling us right now that it is according to the quote-unquote story, people are willing and wanting to buy whenever it's gotten down around that 85 cent mark. So that's kind of my long way of saying 85 cents, definitely an important area of support going into next week. If the price cannot hold above there, then from a story perspective, it's telling us that, well, people are no longer wanting to buy there. People are no longer finding that a good deal. Or it's just simply a supply and demand matter. More people want to sell at 85 cents than want to buy. And in that event, that just implies the price is now putting in a new low. And from a trend perspective, well, that would just be continuation of the bearish trend, that has been happening, because that's what bearish trends do. They put in lower highs and lower lows. In regards to levels of resistance, nothing here has changed from the video yesterday. 92 cents is still definitely that key level of resistance. Multiple times you could see from yesterday, bulls try to get up above it and couldn't quite do it. And then the final thing, to give a little bit of credit to the bulls, by no means am I saying this implies the price is headed up to $1.50 tomorrow, or excuse me, on Monday. But yeah, you can see a little miniature trend here that formed throughout the entire day. Whether or not there's any sort of true strength behind that remains to be seen. But the one thing that we know for sure, a lot of people want to buy at 85 cents, and apparently a lot of people want to sell it up at 92 cents. So we'll see how the price reacts next week in regards to this channel pattern. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good weekend.